thank you so much for joining us here at SuperInvestor. It's great to be back and seeing people in real terms. It has been an extraordinary 18 months for everyone. What impetus for change, if you like, are you seeing due to that? Are you seeing real change in private equity in terms of its embracing of ESG and impact, or is it still an area that is quite siloed?
I don't think the last 18 months has sort of impacted that journey that much. This has been a force for some time. One of the things that's helped from a private equity perspective is actually the ability to work from home and still transact has been very good. But I think it's accelerating with that. I think on that journey from sort of ESG to ESG plus to impact, and where firms or strategies now sit on that spectrum.
There has been cynicism in the past about this industry being able to embrace this fully. Greenwashing is the term that's used. What's your view on that and where the industry is at the moment?
So I think the industry, from a European perspective, has actually been pretty to very good on ESG, or particularly the E and governance aspects, for a long period of time. A lot of it just makes good business sense. What's definitely improved over the last few years is the ability to measure things now, to bring that to bring it to the forefront. But then things have moved on even further to many people now looking to make profit and have a positive impact as well. It's not an instead of, and it's more than just ESG. And so that's sort of the interesting change in I think in that industry, and far less siloed.
In terms of that purpose question that you just talked about, is it more realistic that impact-only firms are setting up? Because the incumbent firms haven't been able to adopt impact because of the concern about returns.
I think one of the challenges with this is really sort of what is that definition of impact? I mean, one holistic view is, anything that isn't doing harm or is having some positive impact in some way is good. Whether something that's specifically set out to do that is very specific. But I think the private equity industry, again in Europe, is on a bit of a journey with that. We're seeing far more people now, maybe younger people, who come into it who have a far greater conscience and want to be doing good as well as making money. It's positive. I think there are many people now who have shown themselves to be excellent private equity investors over a long period of time, very good at making money, but now coming at that and saying, you know what, I want to do more than that, and coming at things with a very sort of impactful outlook. So that's where I really see the development of the industry. But even those people who don't have impact as sort of core to what they do, I think they're just generally getting better at that. That's been driven partly by, say, almost their own conscience, but also from investor expectations as well, particularly European institutions.
You talk there about people and teams, and young people in particular. In order to attract the best people into your companies now, those people are looking to work for companies doing good potentially too.
That's absolutely right. And actually, sort of banging the table for private equity, this is the best industry to do that, because the private equity model is so well set up to do that. We're going in and effectively we understand what we're buying and what we can do to a business. The governance is so very, very strong there. If we ask for it, we can get it. We can be impactful almost overnight from a private equity perspective. So you can understand why people who are sort of coming at that would see private equity as being the perfect environment to sort of institute that change.
We are seeing a proliferation of impact firms who are styling themselves as that. What do those impact firms need to have to really be a safe bet for investors? So
I think they really need to demonstrate the ability to make money. I think most investors almost have a fiduciary responsibility to make returns. That's first and foremost. And so I think it's far easier for people who have come at this, who have demonstrated that ability to make money and have a purpose to it as well, than people who maybe have a purpose and now trying to demonstrate the ability to make money. It's just more challenging that way.
So you need a combination of those talents. You need those real sort of experts in the financial area coming together with the sustainability experts.
Yeah. I think the other point is, I think it's harder as a generalist manager who does a lot of things, who just wants to be impactful in certain areas, to compete with those people who are real sector experts and want to have an impact as well. other than there's actually an increasing market now for management teams who, let's face it, are core to making private equity work, who are wanting to work with people who align to their thinking as well. So it's not just about the private equity professionals coming and saying we want to do it this way. The management teams themselves have actually got to buy into that and are being increasingly selective on who they work with.
How useful is it for you to be able to be at an event like this again and to be able to exchange ideas and have these conversations?
It's just not the same on Zoom or whatever else, is it? No, it's wonderful. I mean, the human interaction. It's great to see people again. I think this has been particularly challenging for quite a lot of the younger people who getting started in the industry, haven't met others. It's very difficult, as we know, to build a relationship with people on your iPad. So it's great to see people again. Hope it continues.
Very, very nice to see you, and welcome
Wonderful.
back to our events.
Thanks a lot. Okay.
Thanks, Merrick.
Bye.